I was in my 30s when I realized that I needed a decent credit score. So in my 20s, I did everything cash. I was an expat. I was earning well. When I came home, whatever I needed to do, I did it cash. There was no need for cell phone accounts, clothing accounts, because I had enough funds to do what I wanted to do. Then it came time to get a line of credit to buy a home. And the banks, my very own bank, which I've been sending dollars to since I was 20 years old, declined me a line of credit to buy my home. Thanks, Standard Bank. And the reason for them declining it was I didn't have a credit history. They had no idea whether I was good enough to be paying my lines of credit because I didn't have a credit card, no clothing accounts, no accounts whatsoever. So my loan application was denied. But what goes into getting a credit score? That's what we're going to break down in this video. Hi, my name is Yolanda. I'm a wealth advisor, and on this platform, I give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. And today we're talking about credit scores. What goes into it? What does it mean? How do you improve this thing in order to get a line of credit? Let's try to understand what really goes into getting a good or bad credit score. And basically, it's when the lenders look at this 3-digit figure. And how they come up with this 3-digit figure, the credit unions are involved. They're looking at your repayment history on your current lines of debt. And obviously, if you were somebody like me who had no history, you're not going to have a credit score. Thereby, you're kind of like shooting yourself in the foot because you've managed money so well that you don't need credit. But now you can't get a line of credit because ironically, you've managed your money well. So this credit score is this 3-digit number that basically is your gateway to a line of credit. And when you have this credit history that makes up your credit score, the lender will be able to gauge how well you will be paying them should they give you a line of credit. Now, various credit bureaus in the country, I think there are about 4 of them in the country that are basically tracking your credit history, how you pay, how much of your credit card utilization are you using every month? Are you paying on time? Are you paying short? Are you missing payments? All of that history, whether you know about it or not, it's all being calculated. The credit unions have it, and they are compiling your credit score. Now, every South African is allowed to have one credit report done per year at no cost. So I use ClearScore. They have all my credit history and they come up with the score. So what do they use with the score? Firstly, they're looking at your repayment history. They're looking at the amounts owed. For example, how huge are those amounts or how small are those amounts? They're looking for the types of credit that you apply for, whether it's short-term credit, like credit cards, store cards, vehicle lending, home loans. They're looking at the types of credit that you apply for, and they're looking for frequency. Because obviously, if you're trying to borrow more often, something's wrong there. Why are you borrowing? Do you have a cash flow problem? What's the story? So that's like a red flag on your credit history. How long have your accounts been open? And if you're like somebody like me that had 0 accounts in their 20s, I had to get a credit card in my 30s just to start building up some credit history. So the greater the length of your lines of credit, the more favorable it's seen by the credit bureaus. How much of your available credit is being used? So that's an indicator. And if you're using a platform like ClearScore, when it comes to your credit cards, they give you a guideline in terms of your credit card utilization. Once you use 50% or more of that lending capacity, it's a bit of a red flag. So they'll tell you, hey, you're using too much of your credit cards. Please pay this down. Stay within these limits to help improve your credit score. They're also looking at your history of not honoring your debt payments. Are there any judgments against you? All of that appears on the credit bureau's information, and all that information is taken into account when coming up with your 3-digit score. Here you see what the credit scores look like. It's out of 705 over at ClearScore. There's no magic credit score that's going to guarantee you whether you're going to be accepted or not for credit. You might get refused for credit by one lender and maybe accepted by another. But that indication from the credit bureau in terms of your credit score is an indication of your credit worthiness. But lenders do look at other factors before deciding whether to lend to you or not. It's free to sign up on ClearScore. Go and check them out. I'll put a link down in the description, and go through that process and have a track record of paying paying down your debt on time, not missing any payments, keeping your credit utilization low to start climbing up this little grid. What does it mean if your credit score is high? Well, lenders do tend to look at your credit score when you apply for a line of credit. So if your credit score is high, it means that you have good credit behavior. It means you have a history of paying down the debt that you have on time, you're not missing payments, your credit utilization is low. And because you have that positive credit behavior, the lender is more inclined to grant the line of credit that you are requesting. What does it mean when your credit score is low? It means your behavior with credit has not been good. You've been missing payments. Your utilization is high. You have large volumes or large amounts of credit to your name. So that's a red flag for the lender as well, that you don't have good credit behavior. If we grant you this loan, what's the chances of us getting our money back from this client? So those are the lines of thinking that the lender is looking at. How do you improve your credit score? You got to start paying down on time. You got to get a debt management plan together. Now, this is the step before debt counseling. All right, debt counseling is the step that you go to where you can't manage at all. You've tried to do things on your own. You need some intervention, then you go to debt counseling. But if you try and plan in advance, where you are tackling your debt one at a time, you're being diligent, you have a plan together, you know what you're going to do, which one you're going to knock off first. Get that debt management plan in place to try and improve your score. How do you improve your score? One, you pay your bills on time. You can pay your bills more frequently. Paying down any credit card debt, that will bring down your credit utilization. Avoid maxing out those store cards and those credit cards, and by not applying for lines of credit too frequently. So those are the things that you can do to try and improve. So if you're looking for a home loan, if you're looking for a personal loan, and hopefully it's not to go buy consumer goods, and if you're actually looking to build your wealth by borrowing, these are the measures that you're going to have to take if you need outside credit. So go to clearscore.com, try and figure out what your score is, and give yourself 6 months to a year to slowly try to improve that score.